Hello there and welcome to another live webinar with Phil Futures. This is Sri, your facilitator for the day. And with us in the studio is Kar Yong. He's a professional trader and he will be walking us through the 2021 gold and US dollar market outlook. Kar Yong's claim to fame? Well, he started trading at just a tender age of 21 with a small capital of US 500. And after 2 years of Forex trading, he was able to increase his capital by 2,600%. Since then, Kar Yong has been featured on Channel News Asia's Money Mine, awarded the most popular FX trainer in Malaysia, and the top Forex Analyst in Asia by WikiFX in 2019. And before I hand the reins over to him, can you please do me a favor and let me know if you can hear me clearly? Just type your answers into the question box. Great. Thank you for letting me know, Mavis, Jimmy. We will be, this is a small exercise to get you oriented with where the question box is at any point in time. If you have questions for our professional speaker, just type them into the question box and we will address them towards the end of the session. And thank you so much for letting me know, Josephine. All right, Kar Yong, if you're all set up, I can hand the reins over to you. Kar Yong?
All right, great. Just to do a quick check, everyone is able to hear me as well, right? So if you can just type in yes in the question box or in the chat so that I know. All right, good. Okay, so let's get started. Again, I really enjoy such live sessions with traders and investors because it's great to interact, share what I know. But I want to make this session as interactive as possible, right? So it's not gonna be like a full-on presentation. I've prepared some materials to share with you, my insights, my outlook, but at the same time, I will leave some time at the back of this webinar to kind of address any questions that you guys have, okay? So while I'm presenting at the start, I might not have the time to look at the questions. So if you have any questions along the way, maybe you want to write it down somewhere, and of course, when we open up for Q&A session at the end, you'll be able to answer those questions, okay? So very quickly, okay, today's topic is on the future market outlook, future meaning going into 2021. Anyway, we are at the end of the year, right? So December, usually market is slow, so it's a good time for us to also prepare what is ahead. Okay, so today's focus will be mainly on the US dollar. We'll look at some of the potential currency pairs related to the dollar, and of course, we'll look at gold and silver as well. Okay, so our objective today is pretty straightforward, pretty clear cut. The first part that we're going to talk about is share with you a little bit into how I personally analyze and look into the market, so that when we go on to the chart, the live market later, you'll be understanding, you get a much better understanding of how I look at the charts, how I look at the market. Okay, so the first part of this webinar, I'll share with you more in terms of like in the perspective of educational purpose, right? To also let you know what are some of the techniques I look at it. Hopefully you'll be able to acquire them to help you in your own trading. Okay, and then of course the second part, we're gonna look into the live market analysis. I'll bring you to the MT5 platform to share with you what are my personal view and outlook of the market. Okay, and of course the final part here is I'm gonna answer any questions that you guys have at the end of this webinar. Okay, good. So don't be shy to ask any questions. Okay, so as we progress, I'm pretty sure some of you would have certain questions you'd like to find out, you'd like to understand more. Perhaps I didn't explain very clearly as well. You want to clarify certain concepts. Do ask those questions at the back, okay? But write it down so that you don't forget it. Okay, so very quickly, this is for those of you who perhaps have not met me before, never hear me share or speak before. My name is Kar Yong. Okay, I've been trading since 2012, but of course, being more of like a full-time trader investor started somewhere between 2015 to 2016. And since then, I've been very actively in the financial market, right? Not only as a trader and investor, but I also do quite a bit of sharing, including something like this in today's webinar. Okay, so I'm also quite active on social media. If you guys would like to connect with me, by all means, okay, just search out my name. You'll be able to locate me. Okay, but this is very quick. I don't want to spend too much time over here, right? But this is important because I believe that there are many, I would say, like trainers or even traders or investors are sharing. But I want to bring across that what I'm gonna share with you today is not based on just theory. Okay, I've been sharing this with many different audience across Southeast Asia, but I want to bring this message across so that you see the importance that what I'm sharing with you today is not theory stuff, right? It's really practical stuff that I personally use to put into the market. Okay, so I do trade the FX market very actively. This is my last year result. It was a very easy year. Okay, but of course, this is not indicative of any future results. Okay, this was past year 2019 results in the future in the FX market. Okay, this year in 2020, it was a little bit tougher for me. Okay, you can see that there are a few months that I'm actually down. That's normal. Okay, that's quite typical in the Forex trading arena. But this year is slightly tougher for me in the FX. Okay, and I want to also highlight that what I'm going to share with you today, while it's very focused on the technical chart of things, you can also apply that in the stock market. Okay, so this is my investment portfolio. This year itself, of course, is not like as fantastic as some of the other investors out there, but this year up to date, I'm able to grow my portfolio by 36%. Okay, so I'm quickly sharing all this so that you know what I'm sharing with you today is practical stuff. Okay, so I want you to all be very attentive. Anyway, you have decided to commit your time here with us today, might as well make full use of it. Okay, so let's dive straight into the first component, okay, which is where I want to share with you a little bit in terms of how I analyze the market, the techniques I use. I believe that's important because at least you gain something away, you take away something with you today, right? So I've been looking at the market from multiple point of view, okay, but to me, I'm still about 60 to 70% of my analysis and decision-making process is based on technical charts. Okay, so I do look at macro fundamental as well. Today, I'll share with you on that perspective in relation to the dollar. But 60 to 70% of my trading decision, my investment decision do come from technical. Okay, and I've been through that journey knowing that a lot of traders, when they got started in this journey, they focus a lot on different indicators and some fancy way of looking at charts. Okay, but today, allow me to present to you a very simple yet effective way of looking at technical charts. Okay, so I call this like directly decoding the price chart. Okay, and if today you pay attention, I'm pretty sure 100% of you will be able to acquire this skill set. And with this skill set, you would have that confidence, that clarity whenever you pull out any chart. Okay, when I mean any chart is literally, it can be currency, it can be index, it can be commodities, it can of course be on any time frame. Okay, so as long as there's a technical chart, you'll be able to apply this principle. Okay, so there are only two ways a price can move. Okay, and whenever I share about this, I'm referring to of course, the principle here is based on Elliott wave. Okay, some of you perhaps might be a bit fearful when you hear about, whoa, Kar Yong is going to talk about Elliott wave, and you might think that it's going to be something very complicated, and you might get confused. Okay, now I want you to be, throw away that perspective, that mindset, because what I'm sharing with you today is going to be a very concise understanding of Elliott wave. Okay, but I want to credit where the principles and concepts actually come from. That's come from Elliott wave. Okay, so there are two ways a price can move. Okay, and based on Elliott wave here, the name, the terminology that we give it is impulse versus correction. Okay, so what is impulse? What is correction? I'll give you the definition here, and then we'll go into the chart and share with you how they look like. Okay, so impulse is essentially a move that is very strong in momentum. There's a very clear direction as to where price is going. Okay, so it can be up, it can be down, but the idea here is you look at the chart, impulses are very obvious. Okay, in the moment, in the second, when I show you the chart, you understand what I mean. Okay, correction is just basically the opposite. Okay, when the price is not moving, is going very slow, that's basically a correction. Okay, it takes a lot of time. It's going up and down. Okay, in a very layman way, we call it like ding dong, right? Price is just up, down, up, down, up, down. Okay, so this is essentially the building blocks of Elliott wave. Now in this screen here, okay, you can clearly see I've highlighted in two color codes. One is red, one is blue. The red are your impulses, the blue are your corrective move. Okay, so right straight away you look at it, you can see the red color ones that I've highlighted, they are very strong in momentum, is going in a particular direction very clearly. Okay, versus the blue one that you see, of course, it's more like the duration it take to develop, it was way longer. Okay, there's no clear direction is going sideways. Those are your corrective move. So any chart, any time frame, any instruments that you pull out, this is how you can interpret an impulse versus correction. Now this principle might sound very simple, okay, but if today you acquire this ability to identify clearly what is impulse, what is correction, you realize that decoding a technical chart is really very simple. Okay, and I've done this with many traders. All of them actually eventually implement this and of course incorporate that to whatever strategy that they have and help them in their own trading journey. Okay, so I want to again emphasize that today's webinar is very interactive. Okay, so I want you to also put some practice directly while we are sharing. Okay, because I believe if today you're going to sit through an hour of sharing, just listening, it's not going to be effective for your learning. Okay, so what we're going to do is we want to interact a little bit. Okay, so do put in the answers in the chat box. Okay, in the chat box, so that I can get a rough idea as to most of you, are you getting it? Okay, if not, then I will need to then make sure most of you actually understand. Okay, so what we're gonna do here is that I'm gonna highlight an area of the chart. Okay, and I just want you to practice based on this, the understanding of what is impulse versus correction. Okay, so for example, over here when I highlighted this light blue box, okay, I just want you to look at it and decide whether this is impulse or correction. Okay, and just type it in. Okay, so that I know roughly, majority of you, if you get it, good. Okay, so if it's impulse, you can type impulse or you just type I. Okay, so as long as I see, okay, majority of you are getting it, okay, that's good, right? So I'm seeing cool, right? So most of you are typing in, great. Okay, so very clear cut, right? That's an impulse. Okay, don't look down on this ability, because as we move forward, okay, and I put these two pieces together, you see how powerful that is. Okay, so of course, then this one here, the dark color blue one, okay, I think this is a very obvious answer, right? So if it's a correction, you type in a C. If it's an impulse, put an I. Good, right? So I see many of you are typing in C. Great. Okay, so that is, yeah, that is a correction. Great. Okay, now next one. Okay, what about this? Okay, the light blue one. Okay, is this an impulse or is this a correction? Okay, so if it's an impulse, I want you to type in an I. If it's a correction, you type in a C. Good. Okay, so I'm pretty sure it's quite clear cut, right? This here is an impulse. Okay, so the next one here, okay, we'll move slightly faster, right? So that as long as you guys, I know you guys are getting it, okay, it's good. Okay, so this is a correction, right? Okay, very slow, it's coming down, it's taking some time. And the last move up here is an impulse. Okay, so I'll go through another two charts so that I want to make sure everyone gets it. Okay, so this part here is where I want you to know that some charts are very obvious. There are some charts that is gonna be not very sure is it impulse or correction. Okay, and I want you to have that confidence and say that if it's not sure, it's not sure. Okay, because again, there are tons of opportunity in the market. There's no need for us to force something in when things are not clear. Okay, and through today's sharing, right, later when I share with you the live chart, you realize that how come I only pick up certain charts and not talk about the others? Is because again, some of it are clear, some of it are not clear, and that's why we focus on those that is very obvious. Okay, so this is actually another chart, very simple, clear cut. From here, you can see this is an impulse. Okay, followed by correction. I'm pretty sure most of you are getting it already, right? This is very fast move to the upside. The momentum is strong. There's a clear sense of direction. There's an impulse followed by another impulse down. Okay, and of course over here you can see this entire piece here is basically a correction. Okay, now why I say that this is a correction, because you can see that this is going up, down, up, down. Okay, so let me just use a little bit of this, up, down, right? A lot of ding dong. Okay, and it's taking a very long time for it to develop versus this one here. Okay, so that's how we actually identify what is impulse and what is correction. Okay, so now this is a little bit more in terms of some additional charts to work on. Okay, so this part here you can see is very fast, is an impulse. This part here is very slow. Okay, it's very small in movement. Okay, that itself is a correction. And this is an impulse. And the last piece here I want you all to take note is this. Okay, now the direction is clear. Okay, let me draw it in. Okay, the direction is clear, right? It's going up. But at the same time, you want to ask yourself is, how is it going up? Is it going up in a very fast way, or is it going up in a slow method? Okay, so you realize that while this is going up, the price is going up, you have a lot of up and down movement. Okay, so this itself is considered a correction. It's slow. Okay, so every chart you look at, there's only two types: impulse versus correction. If it's fast, it's an impulse. If it's slow, it's a correction. Okay, so this chart here, I want to illustrate this. That's important. Okay, some other example. This entire piece up, you realize is very fast. It's an impulse. This piece here is a correction. Is up and down, right? A lot of ding dongs. The next move here, this is fast. Okay, and the last piece here is correction. Okay, because again, it's going up and down. It's not going anywhere. It's taking a long time for it to develop. Okay, good. So hope the concept is clear. Now, once you are able to clearly and confidently identify what is impulse, what is correction, okay, the next part here is where we piece them together to establish what we call directional bias. Okay, so what's directional bias basically means that you pull up any chart, look at it, you'll be able to determine whether you want to focus on buying or do you want to focus on selling. Okay, and with this piecing of together of impulse and correction, you would have a high accuracy, as high as 60 to 70% of projecting and forecasting the market. Okay, which is what I'm going to use to show you and share with you the outlook for 2021. Okay, so impulse wave provides the recent directional bias, and whenever we trade, we want to trade in the direction of what is the most recent impulse. So if the most recent impulse is up, we would like to look for buy opportunity. If the impulse is down, we'll look for sell opportunities. Okay, and with impulse and correction, okay, just now we understand that, we share with you what it is. The idea here is look at it as puzzle pieces. Okay, so you have two pieces of impulse, one up, one down. You have two pieces of correction, one up, one down. And if you play mix and match, okay, you would get a general three combinations or three categories of it. Okay, and this part here is where I illustrate to you these three categories are impulse, combine it with a correction, or you can get an impulse followed by another impulse move, and the last one here we call it impulse then crop. Okay, so of course if you're in front of your computer, you either have your notes, you want to copy it down. If not, then take a screenshot. If not, you know, at the end of today's sharing, I've prepared this slide deck to send to all of you anyway. Okay, so I want you to focus and be attentive on it. Okay, so let's talk about the first combination. Okay, this is the obvious combination called impulse correction. And every time we look at this, okay, so I have a sample here, okay, a drawing here. This is an impulse to the upside followed by correction. Whenever we see this combination, we know there's a 60 to 70% chance the price is going to continue to the upside. Okay, so for us as traders, when we see this combination, we see this pattern, we know there's a high chance we're looking for buy. And if we flip it, of course, then we are looking for sell. Okay, so this is pretty straight, pretty obvious. Okay, impulse followed by correction, that's an up move. Impulse down followed by correction, we are looking for down move. Okay, so again, it's not 100% going to be right all the time, but it gives us a high accuracy whenever we see this combination. Okay, the second combination is where you get, I usually call this a V shape. Okay, is where you get impulse followed by an impulse. This is an inverted V, this is a V shape. Every time we see this in the chart, we don't trade, okay, because there's no edge on our side. There's no advantage for us to kind of forecast where price is going. Okay, later in the live market, I might be able to pull out some example very obvious that is happening in V shape. You know what I mean, okay, when you take a look at that. And the last combination is impulse and crop. Okay, so over here, this is where I want you to see, right? This is a very strong up move. Then this part here is starting to get losing its momentum, right? So I always use the analogy of like, imagine you're climbing a mountain, you're hiking, okay? At the start of it, you have a lot of energy, you are excited, you go faster, okay? And as high as the higher you climb, you start to realize that you start to tire, okay? Energy, oxygen level is down, your energy is exhausted, and what will happen is you start to slow down, okay? And when that happens is what we call a crawl, and usually that means a reversal. Okay, so if I were to show you, okay, 60 to 70% of the time, this will mean we are looking for a sell. And of course, if we flip it, that's the exact opposite, right? We'll be looking for a buy. Okay, so generally, if you piece them together, impulse and correction, this is the only 3 categories. Okay, and of course, if you expand that, that's like 6 types of pattern. Okay, and really, all you need to do is get familiar with this 6 type. Any chart you pull out later, you'll be able to identify them. And having the ability to look at them, be clear as to what is it happening, what's the pattern, you'll be able to define your directional bias very, very confidently. Okay, so to give you some example of how these combinations look like, right, based on charts, these are bar charts. Okay, so this is very obvious impulse correction, so we are looking for the buy. Okay, and the next move up is an impulse. Okay, usually that's how it combines together. Okay, so over here you can see this is an impulse, this is a correction, and usually whenever we see this combination, the next move that is going up, not only we can expect the direction, we can forecast the direction, we also can anticipate that the next move is gonna be an impulse too. Okay, it's gonna be fast. And to us, that's important as traders, because if today you're gonna buy into a market, you are gonna execute a trade, you want that trade to go off in an impulsive way. Why? Okay, so I want you to imagine if today you bought it at this level, okay, and price just went straight up, okay, you'll be directly enjoying your profits. It's very easy psychologically, emotionally to manage that trade. Okay, versus I want you to imagine if today you are looking to trade within this zone. It's very difficult to manage that trade. It's very difficult to manage your psychology, because if today you buy here, you see some profits, you see some losses, you get affected. The next time it comes back up, you'll be hang on. I managed to cover that loss, come back at small profits, you get out, and then market go down, you say, wow, good choice. And then the next thing it happens, it goes up, and your whole psychology is being affected. Okay, so when you are trading in a correction, it's always gonna be very difficult to manage. Okay, so I want you to take note of that. That's why we have that combination coming in, how to identify impulse and correction, so that when you take a trade, you know you are having a high possibility of getting it right, as well as in the shortest time possible, you see the impulse. Okay, another example here, this is the downside. Okay, so you get an impulse, you get a correction. Of course, when this combination comes, you know high chance the next move is likely going to go down, and it's going to go as an impulse. Okay, it comes in various kind of like sizes. Okay, it varies a little bit. You can see this one here, the impulse and correction, the size is a little bit smaller, but the combination, the principles are the same. Okay, so the next move you can see it comes down fast as well. You get another impulse correction, you expect another impulse. Okay, so this is a crawl example. Okay, you get an impulse up, you get a crawl here. We are expecting this to come down. The move down is going to be an impulse as well. Okay, give you another example of another direction. This is an impulse down followed by a crawl, okay, which is losing momentum to the downside, right? So it's telling us that the reversal is likely to come. We are looking for the buy, okay, and the move up is likely going to be an impulse. Okay, so the probability of all this happening is about 60 to 70% of the time. Okay, so again, it's not 100%, but 60 to 70 is good enough, right? To traders like ourselves, sufficient to actually make some good money from the market. Okay, so I'm gonna show you and give you some examples, some activities. The practicing comes in here, right? Okay, so I want you to take a look at a chart over here. Okay, and basically with just this piece of information that I'm sharing with you, I want you to make the decision if today you are gonna buy or sell. Okay, just by looking at this chart. Okay, and the tip here, okay, give you some hint first, right? A lot of traders like to look at what happened in the past. Okay, with this understanding of impulse correction, you put them together, all you really need is the right side of the chart. Okay, all you really need is identify what is the combination that is developing. Okay, and you'll be able to make a decision. Okay, so now I want you to type it in the chat. Okay, whether based on just this chart, would you buy or would you sell? Okay, if you're looking to buy, type in buy. If you're looking to sell, I want you to type in sell. Okay, good, cool. Okay, so I'm seeing a lot of you are typing in sell. That's good, 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 good. Okay, I'm seeing some questions, right? So keep the questions there. I'll answer them later on. So good, majority of you are saying sell. Okay, and it's really not that difficult, right? You can see that over here, what does it look like? Okay, it looks like this combination, impulse correction. So what's likely going to happen? Very obvious. Okay, it's going to go down. Okay, so easy, right? Okay, so give you another example. Like, let's take a look at this. Again, the hint is to focus on the right-hand side, the most recent price development. Okay, and again, I want you to make the decision. Are you going to buy or are you going to sell? Just type it in. If you're buying, you type buy. If you're looking to sell, you type sell. Okay, so good. Seeing most of you are typing in sell, short. Okay, okay, I'm seeing put a question mark. Okay, which means that perhaps you're not sure. Okay, now again, as traders, right? Since you know we have this to talk about, nothing like specific to but generally as traders, right? I want you to be comfortable in walking away from the chart and say that, okay, if this is not clear, I'm not sure, I don't want to trade, I don't want to make a decision. Okay, be perfectly fine with that as traders. Okay, so this one I need to emphasize on that. Okay, good. So I'm seeing a lot of you are saying sell, sell, sell. Great. Okay, it's looking like a crawl, right? It's losing momentum at the top. This is what happened next. Okay, so clear cut, very easy, straightforward. Okay, next two example, last two example, then we go into a live chart. Okay, what about this chart here? Okay, take a look at it. Again, would you buy or would you sell? Okay, if you're buying, put in buy, type in buy. If you're selling, type in sell. Okay. Okay, let me scroll a little bit to see what you guys are typing in. Okay. Am I missing this? All right. Okay, type in, okay, what your decision is, whether is it buy or is it sell. Okay, if you're buying, put buy. If you're selling, you put sell, right? Okay, so I'm seeing some, if I'm not wrong, I'm seeing some of you are typing in sell. Okay, maybe the rest are not coming in. Oh, okay, it's buy, buy, buy. Okay, so sorry, the feature on GoToWebinar, the timing is a bit off. Okay, so it's buy. Okay, good, good. Okay, so I'm saying all buy, buy, buy. Cool. Okay, so it's very clear cut, right? So this is how it looks like. Impulse correction, very clear, very straightforward. What happened next? This is a push to the upside. Okay, again, this is happening on a 15-minute chart. So it doesn't matter small time frame, high time frame, you know, whatever instrument is, the principles of it apply because it's based on technical analysis. Okay, last one here. Okay, and this one we're going to talk about it in the live market as well. Okay, this pattern, this combination, this chart, what are you going to do? Are you going to buy or are you going to sell? Okay, if you're going to buy, type in buy. If you're going to sell, type in sell. Okay, so I'm seeing B, 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 B. All right. Okay, so it's buy, buy, buy. All right. Okay, good. So I think most of you are getting the hang of it, right? It's really not that difficult. This looks like a crawl. And what happened next is this starts to go back up. Okay, and I want you to take a look at this, right? This is actually euro dollar chart. Okay, I took this, I think, like way back when I was preparing some slides on it. And right now, of course, euro dollar is way higher already. Okay, but I want you to be able to see that while it's not 100%, at least with this ability to look at the chart, you have the confidence, you have the conviction, you have the clarity in terms of whether you want to focus on buy or sell. Of course, there are many ways that you can execute, right? Some of us are looking at breakout, some of us are looking at certain indicators to support it, some of us are looking at retracement to enter a trade. But again, the important part for today, the objective here is I want you to see how easy it is to really analyze a chart. Okay, so with that, I'll go on to the MT5 platform, okay, to really illustrate to you guys on a live chart how these principles can be applied. Okay, and we're going to talk about some specific pairs. Okay, right. So this one here, okay, this is gold. Okay, so I'm going to use the gold first to talk about the principles. Okay, and I want to show you on various time frame, various scale, you can always see that happening. Okay, now if I take a look at the daily chart, okay, this is like super zoom out, right? Okay, so if you start from this 2018 low, okay, I want you to be able to see that. Okay, let me bring out my pen. Okay, I want you to be able to see that there are corrections that's happening, right? This is very slow, it's not going anywhere. Okay, of course, relatively, this doesn't really look like impulse now because of this gigantic scale here, right? Okay, but that is actually an impulse. This is also an impulse. You can see this is a correction, it's not going anywhere. Okay, this is also an impulse, and I want you to see that this is what we call a V shape. Okay, so you can see a V shape in the chart, right? Okay, and then of course this is where the sideways happen, the next move up, and of course right now if you take a look at this, while this is coming down, okay, always ask yourself this question, right? It's not just about the direction, but ask yourself the question in terms of how is it moving. Yes, price is coming down, but how is it coming down? Is it coming down in terms of like this here as an impulse, very sharp, or is it coming down forming like losing momentum, right? It's slowing down. Okay, so that is very important. Okay, so I want to quickly show you, okay, any charts, any scale, you'll be able to do that. Okay, so let's go to like even 4 hour. Okay, on this scale here, you can also already start to see you have this impulse down. Okay, so this is the up, right? This is the impulse down. That's your V shape. Okay, and of course you can also see here this goes up pretty strong. Okay, so that's again like your V shape. So every time you see this, you don't trade. Basically, when you see an impulse, you just stay away. Okay, and of course sometimes it's not clear. Like for example, this entire piece here, it might not be very clear while it's developing. By all means, walk away from this chart, look at other charts. Okay, so sometimes it becomes very clear. Look at this impulse, this is just sideways, you are expecting this down, right? Okay, so sometimes it's clear, take that opportunity, take that trade. Sometimes the chart is not clear, walk away, look out for another opportunities. Okay, even on a much smaller scale. Okay, so I want you to see that today, if I even go to like maybe 30 minutes, okay, you'll be able to see that in every time frame. Okay, look at this impulse, correction, impulse, and then you have a V shape, you have a mini correction here followed by another mini impulse up. Okay, so again, these things tends to happen across different time, different scale. As long as the principles are there, it's fine. Okay, so with that aside, okay, I'm going to show you what are some of the pairs we're going to talk about. Okay, mainly these 6 currencies. Okay, so again, why these 6? Because these are the clearer charts, the more obvious charts that we can talk about. Okay, you realize that they are all of course dollar related. Okay, I'm going to talk about that, and obviously you realize that some pairs are not in, like New Zealand dollar is not in, dollar franc is not in, dollar CAD is not in, because they are not clear, right? So we're not going to talk about that. Again, as a trader, I'm very comfortable if there's nothing much on that, we leave that chart aside, we leave that trade aside, we talk about those that has. Okay, so before I go into directly on the application on this, right, I want to bring your attention to like few things to keep an eye on first, right? If you're not aware, every Friday, which is the first Friday, not every Friday, every first Friday of the month, we have the NFP. Okay, and of course the average hourly earning, right? So do pay attention to that because today we are talking about the US dollar, right? And of course, over here, a very quick disclaimer is that the analysis that I'm sharing with you is purely for educational purpose. Okay, I'm trading it. I know my risk tolerance. I know how to manage my risk. Okay, and when I'm sharing all this trade analysis, this outlook with you is really for educational purposes. If you would like to also follow those analysis and execute trade, make sure you understand your risk and how to manage it. Okay, so do take note of that. We are talking about dollar this Friday. We do have the NFP, the dollar tier 1 news as well. Okay, so take note of that. Okay, and to share with you a little bit why I'm focusing on the dollar, right? This is actually a news by CNBC. Okay, it was published in August, but I'm not going to read out everything. I want to just summarize over here that this year alone, I'm pretty sure some of you are also aware that we have COVID, okay, and there's like the lockdowns and it affects the economy very badly. Majority of the central banks are all in easing policy. Basically means they're either quantitative easing, printing more money, or they are lowering interest rate. Okay, so the Fed, which is the Federal Reserve, which is the US central bank, does that as well. Okay, and over here, just a quick summary. Okay, the US money supply has grown by 20% in this year itself. Okay, and that's only up to July, right? What this means is that if there is, before this year, before 2020, if there is like 100 trillion of US dollars floating around, 20% increment happens within this year alone. Okay, and that's huge. Okay, and if you understand the principles of demand and supply, that huge increase of supply where demand is not catching up, okay, it's going to affect the valuation of your US dollar. Okay, and naturally with so many currencies supplied in the economy, in the market, there will be some form of devaluation. Okay, and that will directly also affect like inflation and things like that. Okay, that's why we are talking about the US dollar today and how you can take opportunity of this. Number one, to protect yourself against dollar weakening and therefore inflation. Of course, the second part is how you can actually trade and profit from it. So the protection part as well as how you can take opportunity from it. Okay, so let's talk about the dollar versus the gold first. Okay, now why gold has seen such a significant rally this year is, of course, number one, there's this risk-off environment where people are investing into commodities, safe haven asset like gold. Okay, and moving forward, my personal outlook here, my personal view is that the dollar is likely going to be weakening soon in the future. Okay, because of, again, the oversupply of the US dollar, the valuation of it is going to drop. Okay, and investors itself, hedge funds, large speculators, what they're going to do is they're going to park their money out from US and they need to put it somewhere to grow their wealth. Okay, and likely one of the very interesting asset that they might consider and you want to also consider is, of course, your precious metal. And that's what we are referring to as gold or silver. Okay, so over here, from a daily time frame perspective, okay, so for me, whenever I look at the chart, the two main time frame I focus on is daily and 4 hour. Okay, I don't think it's wise to go like weekly, because if I'm trading the market, you know, if I'm looking at weekly time frame, is like too long a horizon. If I go to 1 hour, 30 minute, 15 minute, then I'll be glued in front of my computer and I need to monitor market almost like actively all the time. So that's not my style. So to me, a good balance is between like 4 hour and daily time frame. Okay, so let's apply some of the principles we talk about, right? Very, very straightforward and quick. This is definitely an impulse, okay? And the question now you ask yourself is, well, this is coming down, okay? How is it coming down? Is it coming down fast or is it coming down slow? Now, the question here is relatively to the previous move. So this move here, you can see is very fast to the upside. So while this is coming down, you want to ask yourself, relative to this, is it faster or is it slower or is it as fast? Okay, and what you will realize that the time duration it took, okay, is also significantly longer. So there are two elements to it, right? One is price, one is timing. Now, if you take a look at this, this is the time here that it took, okay, and this is the time here it took. This is definitely way longer. And in terms of the magnitude of price, this is the magnitude of it. This is just the magnitude of it, okay? So by this comparison, you realize that, okay, this looks like it's slower. And what combination do we get from here? Impulse correction. Okay, so from there, we know the directional bias as of now, based on right now, this chart, this analysis, the bias is due to the upside. Okay, and what I will then do is I will then look for buy opportunities. Okay, so my time frame, I will go down to 4 hour time frame and I want to see if there is any way I can get involved. Okay, so now if you take a look at this here, this is what we call a V shape. again, all these principles are being applied. Okay, you realize that I don't need to take a look at all this because I'm focused on the right hand side of the chart. Okay, so look at this. This is a V shape, which means that this here is an impulse. Okay, and as traders, every time we see an impulse, I don't enter the trade yet. Okay, for a very simple reason. Number one, after an impulse, usually in the market will take a break, so it can form a correction like that. If that happens and I buy here, I will be trapping myself in this entire period, affecting my psychology. Why would I do that? Okay, so I don't want to get it. Now, the other possibility the price can do is it can do another V shape like that. Okay, then even more, I wouldn't want to buy here, right? Because it means that I'm going to lose if I get in from there. Okay, so again, reason number two, I don't want to get it. Now, what can also happen, of course, it can continue to go up, but it starts to slow down. And what does it form? It forms a crawl. Okay, and imagine today I buy here and this happens. Again, while I can make money, that whole process is very, very difficult emotionally. Okay, because you're gonna suffer some drawdown, you see some profits, you're happy, your profit starts to dissolve, you get worried, you see profit again, you get fearful. When you come back down, you quickly exit, and then that trade is just not worth it. So whenever I see an impulse just like that, that's why I don't get it. Okay, so you shouldn't too, right? If you understand where I'm coming from. Okay, so what we want to see from here, of course, is price starts to give us a correction. Okay, so we are on a 4-hour time frame, right? For this to develop, it might take maybe a couple of days by end of this week, perhaps. Okay, and maybe if this is what is going to happen by next week, that's where you can get a trade in. Okay, and the bias is up, right? We have established that on the daily time frame. Okay, the bias is up, so I'm looking for buy. Okay, and today I've also prepared some templates that have done all the analysis. Okay, and of course, if you stay through the end of this webinar, you also get to download all this template and you can load it up on your MT5, and you'll be able to see exactly this drawing that I've done. Okay, so to quickly walk you through a little bit to understand these drawings, okay, because all the other pairs have done this as well. What you see over here, of course, is this is a correction. Okay, so in terms of Elliott wave, the labeling here is A, B, and C. Okay, so you realize that while it's complex, some of you perhaps have heard about Elliott wave before. It's complex, right? You realize that based on principles of impulse correction, we are already doing that. Okay, a correction of ABC is slow. It's not going very fast. It's a correction. Okay, over here I've also included the Fibonacci ratios to give you the perspective of usually if this is an ABC, okay, this here is gonna be about 100%, which means equal length of this. Okay, so just to share with you on that as well in terms of this analysis. Okay, and the idea here is the target, the minimum target we are looking out for is this previous high. Okay, which means that we're anticipating this to go like that. Okay, with a minimum target of this high here, somewhere around 2078. Okay, around that price region. Okay, again, when you download and you look out for this on your MT4 platform, you can play around with it, you can zoom in, zoom out, and it becomes much clearer. Okay, so this is on the daily view. On the 4-hour view, I also have this done up. Okay, and this is how we look at it. Okay, so from an Elliott wave point of view, again, some of you might start to get confused, but don't worry about it. The principles are the same. Look at this, impulse, correction. This move down is pretty fast. It's an impulse. Okay, of course, inside here, for those of you who are familiar with Elliott wave, that's the 1, 2, 3, 4, 5. It's a 5-wave move. Okay, and you want to also see there's a divergence between this 3 and 5. Okay, so what does all this mean? It just means that the reversal is likely going to come, and we see this first impulse push to the upside, right? Okay, so for me right now, okay, there are generally 2 ways you can get involved in this. Okay, so I'm going to share a little bit of the entry technique as well. Okay, so the first way, of course, you look at a correction. Okay, let me update that. Okay, so usually the correction here, we use a 50% retracement. Okay, so I'll just put that in. Okay, so what this means is that we want to wait for price to form a correction. Okay, and this correction likely will do something like that. Okay, and we look to enter somewhere around here, and of course our stop loss will be below this previous low. Okay, and the idea here is in the short-term target. Okay, if today you are slightly shorter-term traders, then look out for this zone. That means the idea here is you buy somewhere here, you're gonna look to take some profits here, and of course manage that trade. If the trade is likely gonna continue more to the upside, just shift your stops, protect your trade accordingly. Okay, today we don't have the time to go into all this detail. Okay, but I want to share with you the big picture. What are some of the trades to pay attention to? What are the direction that you want to focus on based on the principles that we just covered just now? Okay, so this is on gold. On daily and 4-hour, that's the analysis that I've done. The bias is to the upside. Okay, so on the daily perspective, you can see while we are taking short-term targets here, right? The move can obviously extend all the way back up. Okay, so imagine today you are able to enter a trade close to the low. Okay, the upside potential is huge. Your risk reward ratio is definitely worth it. Okay, so I want you to take note of that. Go pay attention to that pair. The other chart that we're going to talk about, of course, is the brother of gold, which is silver. Okay, so same thing. Just load the template on silver. Okay, and all the analysis has been done for you. Again, this move here is a 3-wave move. Okay, 1, 2, 3. Over here, okay, this might not be the cleanest one because you can see this is still corrective. Okay, which means that it can still come back down, right? So understand that. Okay, this chart is not the cleanest of all because you do get an impulse, you do get a correction. This can still come back down. Okay, but if you take a look at gold, okay, it's cleaner, right? Gold is cleaner. Okay, so the idea here is, let me clean that. Okay, on the daily, it's much cleaner over here, right? You can see this is a mini V shape. Okay, so sometimes look at chart, if it's not clear enough for you, be okay to walk away. Okay, on the 4-hour though, okay, let me load this 4-hour for you. Okay, you realize that this here is an impulse, okay, and this impulse has already reached this zone as we are talking about. Okay, so what does this mean is that you might want to be patient again, right? Because impulse, we don't enter straight away. What we want to see is a correction which looks something like that, okay, towards somewhere around the 50%, and that's where our opportunity comes. Okay, and I also want to show you a little bit on the technical side of things. This impulse has also broken this trend line. Okay, and if the correction happens above this trend line, we have a good probability trade to the upside. All right, so that's on gold and silver. Okay, you realize that I'm focusing always on the right hand side of the chart, okay, and never about the past, okay, because again, based on this principle, that's all we really need. Okay, another pair I want to talk about for your attention on is euro dollar. Okay, now just now we have the chart example, right? We share with you that, okay, that's happening like somewhere around 1 point something. Okay, so you realize where we are right now over here. Okay, and same thing if you just load the template that we've done for you. Okay, this is the analysis on it. Okay, now it's going up for sure. Okay, but you want to ask yourself right now is that at this point of time, is it fast or is it slow? Okay, now it's still going up, but it's losing its momentum, right? It's more like a crawl. And for those of you who are familiar with divergence, you do have that. Okay, so the idea here is if this is a crawl, we want to look for that short-term downside first, the reversal. Okay, so back to a potential level around 1.136 or 1.1190. Okay, this is on the daily, so it's on the bigger scale of things. Let's take a look at the 4-hour. Okay, so over here again, just load the template. You can see this is the 4-hour chart. We are already at the key zone. Okay, so all these pairs when I'm bringing up today and sharing with you, they are already at certain level that you want to pay attention to. Okay, which means short-term wise, moving forward from today to next week, you want to pay attention to these pairs. Okay, but again, take note, right? This one here, how the price goes up in this scale, in this 4-hour, is an impulse. Okay, it's a very fast move to the upside, right? So don't trade first. What do you want to wait for? You want to wait for at least an indication that price is coming down by forming a small V shape. Okay, and here it forms a correction, right? So you get this combination of impulse correction. We follow the direction of the impulse. In this case, this impulse here is down. So if this forms a correction, we'll look for the trade to the downside. Okay, so euro dollar short term wise, I'm personally looking for short opportunity sell. Okay, so take note of that. We are already at a key zone. Okay, another one for you guys to pay attention to is the pound dollar. Okay, now before I load the template and the analysis for you, right, just pay attention to the right hand side of this chart on the daily time frame. Okay, how is price going up? Always ask yourself that question, right? If it's coming down, how is price coming down? So this is obviously going up. Okay, so you want to ask yourself, how is price going up? You realize that there's a lot of overlapping ding dongs, right? And relatively to how this is coming down, this here is slow. Okay, so if this is going up in a very slow manner, then you know this is a correction, this is an impulse, and if you combine it with a little bit in terms of like resistance, double top formation, there is where your probability to take a trade is. Okay, and we are very close at this key zone, right? We are very near this previous high already. Now if I load the template for you, this is pound dollar daily. Okay, this is how it looks like. Okay, not only we have potential double bottom, this actually come back all the way to this late 2019 period. Okay, and of course there's some fit over here. This is basically just sharing with you 1, 2, 3. This is a very classic 3-wave correction in Elliott wave, but again the idea here is going down very slowly. Okay, so the projection is that in the shorter term period, okay, maybe within a month to 2 months time, there's a possibility of pound dollar coming back down to 1.3060 to 1.2970. Okay, so that's on the daily perspective. If we go down to the 4-hour time frame, okay, this is how it looks like. Okay, let me load the 4-hour, right? Okay, you can see what is this development? Very slow. Okay, so it's a crawl. Okay, and you do see a divergence as well, right? So sometimes I incorporate a little bit of all this momentum indicators. It's a crawl, it's a diagonal, okay, which means that there's a likelihood of a reversal. Okay, and this trade here is, again, you can see is near of completion. Okay, again, you need to have your own strategy, but for me, if tonight is just going to continue to do a mini correction here, a breakout trade is something that I will consider. Okay, but of course, I do not want to go into too details as to where I'm entering and such, because everyone have different risk approach. You need to have that in mind. Okay, but today I'm sharing with you the big picture, the direction itself. Okay, so this is on pound dollar. The next one, okay, this is very, very interesting. Okay, and the potential is huge. Okay, so take a look at this chart on the daily. This is the dollar yen chart. Okay, and I want to give you that few seconds to just digest what you're looking at this chart, and you know, make a decision for yourself, right? If you take a look at this chart, would you be focusing on buying or focusing on selling? Now, if you have been paying attention all this while, it shouldn't be difficult. Within that split second, you should get the answer very confidently. Okay, in fact, you should get the answer of I'm interested to buy, or I'm interested to look for buy opportunity. Why? Okay, very straightforward. How is price coming down? Slow, a lot of overlapping, corrective nature. What was the previous move? This is the previous move. This is an impulse move up. This entire piece here is a correction. And when that happens, what is the next likelihood it can do? It can do this. Okay, and this is on the daily chart. So imagine from here to here, that is a huge opportunity to the upside. Okay, so let me show you the analysis. Let me bring that in. Okay, dollar yen daily. Okay, very clear cut. Okay, this is a correction. We are already in that key zone. You can see I've highlighted here. The minimum target from a daily point of view is around 107.4 to 108.4. Okay, of course, this here can extend all the way back to this high, which is over here at 111. Okay, so this opportunity is huge. Okay, so take note of that. I do have the 4-hour time frame as well. Okay, so over here you can see that the 4-hour time frame right now is a little bit conflicting in terms of what the daily is telling us. Okay, so what I've done over here, you can see this now is still very slow. This now is still an impulse. So if you see this as an impulse, this is a correction. That's why I say here key area to watch, because if price forms a mini V shape here, it has the possibility of coming back down towards this low here first to form a bigger double bottom. before that move to the upside. Okay, so the crucial level, of course, right now is this here. Okay, how would price react here? If price comes up in a crawl formation like that, then you know again what this means. This is going to come down first. Okay, but of course, what can price do? It can impulse up and form a correction. Okay, if that happens, then likelihood this is not going to happen. We're going to take that trade to the upside from this area. Okay, so I want you to take note of it. Again, the principles, you can see I'm always applying impulse, correction, impulse, 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 crawl. What is the combination that's happening? Okay, that gave me that clue as to whether I want to buy, sell, or wait for it, don't trade. Okay, so pay attention to this. The daily is very, very attractive to the upside. Okay, you can see all the way up here. But on the 4-hour time frame, you might want to be cautious in terms of this key zone. Okay, so that's on dollar yen, but the upside is huge. Okay, so pay attention to that. The last pair that we want to talk about and focus on is on Aussie dollar. Okay, and this one here is very similar to the pound dollar chart. Okay, which is what you see over here, the diagonal, the crawl. We are looking for the downside. Okay, so this is also happening over here. You see a divergence as well. Okay, so in terms of a short-term trade, okay, you can look for this to sell it. Okay, somewhere around at this region at 7425 is a good area to look for sell opportunity, and with the target around here, that is gonna be 722. Okay, so that's a good, I would say, about 200 pips of room for the short term. That's great. Okay, so do take note of all these opportunities. Okay, for Aussie dollar, the daily chart is not clear. Okay, so there's not much of a decent opportunity that's obvious on the higher time frame. So for Aussie dollar, it's more of the shorter time frame, 4-hour. Okay, if you're looking for big move, okay, consider focusing your effort on gold, and of course this one here, dollar yen, okay, on the daily time frame. So let me load the template. Okay, this one here. Okay, so these two here provides very big room to the upside from a longer time frame perspective. Okay, so hope this analysis is clear. This opportunity presented are clear, and you'll be able to see why we need to talk about the front part first, so that you can appreciate why I have this kind of outlook, right? You know why I have this kind of outlook, not just take it for blindly. Okay, to me, gaining that understanding for you guys is very, very important. Okay, so good. Now I'm running a little bit short of time, but I still want to answer as much question as I can. Okay, so I want to let me open up the question tab. Okay, so let me scroll through and see if you have any question. Okay, if you have, now is a good time to type it in. Okay, so while I'm scrolling, okay, so it might not be in order because again, these are all jumbled up. Okay, so I'm gonna just scroll and see. I just now saw one question. Okay, some Ashley. Okay, Ashley asked about dollar sing. Okay, cool. Okay, so let me do that. Okay, let me pull up the chart on dollar sing. Okay, over here. Okay, now you can actually start to apply what we just talked about in the principle as well, right? So on the 4-hour time frame, if you take a look at this, okay, let me zoom out a little bit. Let me zoom like that. Okay, take a look at the 4-hour time frame. It's super obvious. Okay, ask yourself this question, right? How is price moving now? Okay, look at this. Very slow. Okay, where is it going? It's going down, but it's very slow. Okay, and previously this is the impulse, right? So what do you get in this combination? You get an impulse, you get a crop. Okay, and where would this likely go next? Likely this is going to reverse first. Okay, so from the short-term perspective, you realize that this is likely going to go to the upside. So if you're looking at this is dollar sing, which means dollar in the short term might see some strength, okay, relative to the Singapore dollar. Okay, so the key zone that you want to take a look at, or I would say if you're looking to buy, this might be the target area or zone. Okay, somewhere around here. Okay, so usually price will see some reaction at this high when it's going up. So pay attention to that level if you're looking to buy. Okay, and of course you can put in some analysis over here. You can draw this trend line. Okay, this looks very obvious as a diagonal, right? Okay, from a daily point of view, okay, it's not very clear. Okay, that's the reason why I never bring this up. Okay, because you can see right now we are at this area. Okay, if I zoom back in a little bit, there's not much of a clear pattern combination happening on the daily, right? Because you look at this, it's not as clear as like gold. It's not as clear as the dollar yet. Okay, so for that reason, this is only really on the 4-hour time frame. That's the reason why I never bring this pair up today, because it's not the best opportunity out there. Okay, so I hope I answered your question on this. Ravi asked, could share template? Yes, right. Before we end this webinar, I'm gonna give you the link where you can download that. Okay, Edward asks, does it apply to all time frame? The answer is yes. Okay, this principle that I share with you applies to all time frame. Okay, okay. Ping Ho asks, can you share your macro and sector analysis? Yeah, okay. Actually, I prepared to share that, but I realized I overrun a little bit. Okay, but I'll do it quickly. Okay, because I feel this is very important as well in terms of macro and sector analysis, right? Some of you who have been following me sometime, you know that I focus on technical, but I look at as comprehensive as I can in terms of the financial market. Okay, and one of the important elements that many traders don't look at is what we call macro environment. In short, a lot of investors, when they analyze the market, especially the stock market, what they do is they only look at like what's the earnings per share, what's the EPS, how is the company performing, and things like that. Okay, but that's a very fundamental perspective of a company, right? You're looking at one level. Macro is like the big picture, the umbrella of it. Okay, we are talking about global environment. Okay, so macro over here, I have a few indicators that I look at. The idea behind this is, if you want to understand a little bit more, you might want to go and research on this particular person called Druckenmiller. Okay, he talked about macro a lot. Okay, and the principle here is that liquidity moves the market. Okay, so you might actually 2020 you see that happening very obviously, right? Why March the market tanked and then almost instantly the market rebounded very strongly in April. Okay, it's really because the macro environment is flush with liquidity. Okay, central banks immediately cut interest rate, immediately print money. It flushed the market with liquidity, and that supported the entire financial market. Okay, so you realize that as of today, December 2020, the macro environment liquidity is 5. Okay, the max score it can get in my system is 8. Right now, it has a 5 point, which is very liquid. Okay, which means that generally stocks market are going to be supported. Okay, but one thing you want to take note of, because I also look at the percentage of stocks above the 200-day moving average. Now, the last I looked at it was about 80% of the stocks is above 200-day moving average. Okay, so that means you want to be cautious because a retracement is likely going to come. So you do not want to be too aggressive buying into the stock market while the liquidity here is supportive of it. Okay, so if this drop backs down below 70, like maybe 50 is bullish. Okay, if today you realize that it's less than 10%, it's really a buying spree. Okay, and that happened in March this year. Okay, where majority of the stocks are below the 200-day moving average, but at the same time the liquidity is 5, is liquid, is green zone. Then that's what it means. Okay, so today this is the environment we are in. We are liquid, stocks are being supported, but at the same time be cautious. Okay, wait until a retracement, then your opportunity comes. Okay, so that's the macro. The sector, what I look at is of course the principle of sector rotation, where the economy cycle is right now. This is important as well moving forward into 2021 and 2020. Okay, of course this expand beyond like gold, expand beyond the dollar. This is more like the global markets, right? There are a few indicators. I won't have the time to go through everything here. Okay, but generally you want to take note where we are right now. Okay, which transition we are. Okay, so you can see based on the indicators, we are between full recession and early recovery. Okay, of course earlier this year we are in a technical full recession globally. But right now we are transiting towards early recovery, and certain sectors tends to perform in certain economic cycle. Okay, so you realize that for the earlier half of this year, technology sector performed boom, very good, right? Reason again is because we are in full recession, and that sector tends to perform the best. Right now, we are transiting into early recovery. Going into 2021 is definitely going into early recovery. 2022, we might start to transit into full recovery. Okay, and over here you can quickly see this is again not designed by me. This is based on a model called by Stan Storvert. You can again Google about this. It's basically sector rotation, right? In early recovery and full recovery, these are the sectors to take note of. Okay, so for me, going forward into 2021, if you're looking at all this, pay attention to like industrial, basic industry, energy sector. Again, why does this happen is because government will start to have a lot of fiscal policy. Okay, the spending is going to go into industrial, it's going to go into energy, it's going to go into production. Okay, and naturally those companies tend to perform. Okay, so that's a very quick one. Okay, I won't have too much time to go in that, but hopefully it's clear and is able to provide with you some insights from there. Okay, so hope I answered that. How do you spell his name? You try to combine a few keywords. I can't remember the exact spelling. Okay, so you try to combine like economic cycle, sector rotation, Stan Storvert. Okay, you likely can get that by just googling. Okay, yeah. So I can't really recall how to spell. Okay, Alice has a question over here. How do we choose between 4-hour and daily time frame? Okay, at least that's a very good question. It's really back to your personal preference. Okay, so for me, I don't execute a trade on daily because the duration is going to be quite long, which means that if I take a trade on daily time frame, I might need to be prepared to hold on to that trade maybe 2 weeks, 3 weeks, or even a month. Okay, if I'm trading, okay, I wouldn't want to do that. But if I'm investing long term, like maybe gold, dollar, yen, I'm okay with that. But if I'm actively trading in and out for shorter term, right? 4-hour to me is a good balance. So again, depending on your preference, are you trading or are you more like the long-term swing opposition trades? Okay. Hope I answered that question, right? Tiffany asks, how do you know the correction is over and the impulse is coming? Hey, very good question that I won't be able to answer you in detail today because that goes into the strategy component and we need quite some time to talk about it. Okay, but I'm gonna use this here. Let me bring up one chart to talk about it. This one. Okay, the question is, how do we know when the correction is likely going to end? Okay, so I'm going to use this as an example to walk through that. Okay, now in Elliott wave principles, right? Today you understand how to identify impulse correction. That's a really very powerful. Okay, the next step, obviously, you want to keep working on it, right? The next step, obviously, is how do you know where would this correction likely to end? Okay, now how would I know this is the key area to watch? Is because likely, if it's going to be a correction, this is where it's going to end. Okay, there are two principles here to keep it simple. First principle, there's this thing called wave expectation. So the idea here is 1, 2, 3. Usually the market move in threes. Okay, that's wave expectation. So when you see 3 wave, likely is a complete set. Okay, so that's one way. The second way is you realize I'm using fib, right? So that's called fib expectation. So again, roughly this is where the area is going to come, and this is the area where this correction is likely going to end. Okay, 1, 2, 3. Okay, if I bring you to quickly, right? If I bring you to another chart here on the gold versus the dollar, right? Again, okay, you can see the wave expectation of 1, 2, 3, the fib expectation over here as well, and that's the reason why the idea of me focusing on gold right now, because it's already close to that zone, which means likely this correction here is completed. Okay, so that's how in a nutshell I do it. Okay, but of course to go into detail of that is not something I can explain and answer a question in 5 minutes. Okay, so I hope you understand from there, but to give you some idea into it. Okay, Josephine also asked that question, right? So about correction and crawl, how do we know coming to an end? Is the same idea on this. Okay, so correction is 1, 2, 3, 3 wave expectation. Okay, if you take a look at diagonal, okay, as we speak, this is moving. Okay, if you take a look at diagonal, okay, what it looks like is 5. Okay, and that's why you see here I have 5, right? 1, 2, 3, 4, 5. Okay, so crawl and correction slightly different. Okay, crawl 3-wave expectation, correction 3-wave expectation, diagonal or crawl is a 5-wave move. 1, 2, 3, 4, 5. Okay, so there's some fit as well, but diagonal or crawl, the fit is not as clear as the correction. Okay, so I hope those are clear. Again, I won't be able to explain it in depth in such short period of time. Okay, but giving you that concise glimpse understanding of it, that's where you want to work on it further. Okay, go and understand a bit more on this. Okay, let me quickly scroll through some of the questions. Okay, Jessie asked a question which I'm not able to answer you in this webinar. Jessie actually asked, she understands when to buy and sell, but how to determine the entry price and the stop loss. Okay, again, there are many ways to do that, but I won't be able to answer your question just like that, because again, every trader have a very different profile and personality in executing the trade, right? Some of us prefer breakout, some of us prefer like a retracement trade, and then I put in a pending limit. But the idea here is there's no one best way. You want to know which one suit you. Okay, so the idea here is I won't be able to share something like this straight off here because it's gonna confuse and might mislead quite a lot of people, because then they start to think that, oh, that's the only way to do it. Okay, but generally I want to share with you is there are many ways to execute trade. You know, if we have the opportunity, I can dive into maybe on this topic of like what are the methods to look up for entry, where to put your stop loss. Okay, I can't only share one, because if I share one, everyone will start to see that, oh, that's the only one, and then, you know, that might mislead a lot of people. But if I have the time and the opportunity, perhaps in the future, okay, we're going to talk about various methods so that from there you understand, you make an informed decision as to which method suits you. Okay, so I hope you understand that. Good. Okay, so I'm overrun a bit, so I'm going to answer 2 more questions that I see. Okay, so some people ask pretty straightforward questions. Everything you see here, the slide template, I'll share with you in a while how you can download it. We have done it for you, you'll be able to download that. Okay. So quickly ask, is this applicable to shares? Yes. Okay, you can apply this technique as long as there's a chart. You can apply this to any instrument. Okay. Good. Good. Okay, so I think I answered most of the question. Cool. Okay, so good. I'm sorry that if I miss out some of the question. Again, the platform kind of like the timing of the questions get jumbled up a little bit. But the idea here is I hope you understand and gain something out of this webinar. Okay, I usually don't overrun. Okay, but again, Q&A always tend to overrun a bit, but I'm fine. Okay, hopefully the organizer is fine. Okay, back to the slides to quickly share with you where you can get the slide deck. Okay, anyway, everything I share here is free, and the template. Okay, so the template here you need to download, and of course go and download the MT5 platform from Futures, Phillip Futures, so that you'll be able to then download the template that I give you, copy it into your MT5, and you'll be able to load the template just like how I did it here, right? Right click, go to template, you'll be able to find those and load it up. Okay, so over here, what you can do is just quickly take a screenshot of this, you know, this website, so that you'll be able to download this slide deck and the toolkit. Okay, very quickly you'll be able to do that. Take a screenshot, take a phone, take a photo of this so that you can do it even after this webinar ends. Okay, so the website is just basically report.esmart.agency/webinars like that. Okay, good. And with that, okay, we'll come to the end of the webinar. Really hope you guys gain something out of it, benefited from this. The most important thing, of course, is to take away at least one thing. Okay, one lesson, and don't just focus on what trade to take or what pair to focus on, right? Because every time I share, while we focus on the practical stuff of the outlook, the trades, that the opportunities available, to me, one thing very important is if you have attended this webinar, at least you learn something that's able to help you in your own trading. Okay, so I hope I achieved that. Okay, and again, would like to thank Phillip Futures for giving me this opportunity to share with you guys. Really appreciate that. Okay, so that's all from me. I'll pass the time back to Sri.
All right,
Sri, are
thank
you
you
there?
so much, Kar Yong.
All right, good.
All right, thank you for being a wonderful audience, and for everybody who's still tuned in right now. I hope you do practice with the templates that Kar Yong shared earlier. The best way to practice them is to request an empty file demo. Your QR code is right there. If you have any other questions for the speaker, please type them into our survey form at the end of the webinar. Once again, thank you. And for those who have not had dinner, please go and have dinner right now. All right, have a good night. Bye-bye.